Nvidia is on the mind, and for good reason, as the S&Ps and the Nasdaq continue to march higher. One of the big reasons is Nvidia shares, which are up almost $8, over almost $131. Caroline Woods is here to explain perhaps the primary reason why, as this U.S.-Saudi investment conference made some news headlines, and Nvidia seems to be a big winner. What was the story?
Hey there, Alex. Yes, chips in general, a big beneficiary today, but Nvidia, as you said, up another 6+% today, now up 12% this week, 20% this month, and today pushed its market cap back above $3 trillion again for the first time. I think it was since late February there in terms of timeline. Yesterday, of course, the optimism was all about the tariffs between the U.S. and China temporarily being slashed. Today, there is optimism about sales in Saudi Arabia, where President Trump and tech leaders like Nvidia CEO Jensen Huang are for the Saudi-U.S. Investment Forum in Riyadh. Jensen Huang announced that Nvidia is partnering with Saudi Arabia's state-backed Humane on a 500-megawatt data center project. Humane is going to be building out the AI infrastructure in Saudi Arabia, and it will apparently be powered by several 100,000 of Nvidia's most advanced GPUs over the next 5 years. So there's optimism around that in terms of sales, and also just the fact that this suggests that the Trump administration will likely grant Saudi Arabia wide access to advanced U.S. chips. Until now, tech companies needed those special U.S. licenses to export advanced chips to many Middle Eastern countries because of security concerns and their relationships, of course, with Beijing, with China. Among other chip companies, though, if you take a look, AMD, Broadcom, also up big today. Saudi Arabia, on that note, is also investing in AMD. They formed a $10 billion alliance with Humane as well. So this could mark a significant policy shift as it relates to countries outside of China. Nvidia is still mostly banned from shipping its chips, its advanced AI chips, to China. Last month, the Commerce Department, of course, said that it imposed new export licensing requirements on sales of Nvidia and AMD chips to China, and as a result, Nvidia said it would take a $5.5 billion charge related to that, to the H20 graphics processing units. And it sounds like there's some developments potentially around China as well. Reuters is reporting that Nvidia is close to releasing a downgraded version of its H20 chip to China. And then Piper Sandler is out with a note saying that while this has not been specified just yet, we think as a measure of goodwill, the U.S. government is likely to allow companies like Nvidia and AMD to sell chips within China that were previously banned. Again, not announced yet, but they think it's likely announcement as trade negotiations solidify. They said Nvidia could also stand to benefit from a potential ability to sell the $5.5 billion of H20 product that was previously written off. These chips may potentially and possibly be allowed to be sold in China, in our view. So they already had a bullish call on Nvidia, overweight rating, $150 price target. But it seems like there's some optimism on the China front as well. But, you know, these Saudi Arabia sales certainly sending shares higher today. So Nvidia, which had been, you know, not an outperformer this year, is inching closer to the flat line for year-to-date performance, only down about 2% now, and only down about 14% off the high. So it's seen quite an impressive recovery here at this point.
You stole my thunder. That's what I was about to say. You talked about Meta and Microsoft being the only green Magnificent Seven names. Well, Nvidia is trying its best to join that group. It's now the second largest company by market cap as well, passing Apple the last few days, really today, with this monster.
Nvidia's stock increased more than 6% Tuesday, following the chipmaker's agreement to assist in the construction of a massive data center using Nvidia hardware with Saudi Arabia's AI company Humane. Over the next 5 years, hundreds of thousands of Nvidia GPUs will be used in the initiative, which is a component of the nation's larger drive into artificial intelligence. 18,000. Grace Blackwell GB300 superchips connected by Nvidia InfiniBand networking are being deployed in the first phase. The collaboration is intended to support Saudi Arabia in advancing its national AI plan, according to Nvidia CEO Jensen Huang. Workloads requiring up to 500 megawatts of capacity are anticipated to be handled by the facility. The stock has been rising sharply since breaking out of a falling wedge pattern last month, and on Tuesday, it made a decisive close above the 200-day moving average. Investors should keep an eye on key support levels near $115 and $96 as well as important overhead areas on Nvidia's chart. Nvidia shares will remain on watch lists after the AI favorite returned to the $3 trillion market cap club on Tuesday after a major partnership with a state-backed Saudi Arabian AI company was announced. The chipmaker will sell several 100,000 sophisticated GPUs to an AI subsidiary of Saudi Arabia's sovereign wealth fund over the course of the next 5 years, beginning with an AI supercomputer powered by 18,000 GB300 chips. The agreement was made at the start of President Trump's 4-day Middle East tour. Concerns that the Trump administration's trade policies and limiting AI spending would hurt the company's sales caused Nvidia's stock to drop more than 40% between February and April. But thanks to hopes for new trade agreements, the stock has risen 50% from its low last month. We examine Nvidia's chart in more detail below and use technical analysis to pinpoint important price points that are worth keeping an eye on. Nvidia shares have trended substantially higher after breaking out from a falling wedge formation last month, with the price staging a crucial close above the 200-day moving average, MA, in Tuesday's trading session. It's also worth pointing that today's move occurred on the biggest volume in several weeks, showing heightened interest in the chipmaker's stock. The Relative Strength Index, RSI, warns of approaching overbought conditions, which may result in short-term profit-taking, even while it supports positive momentum with a value slightly below the 70 threshold. Let's concentrate on two significant overhead regions on Nvidia's chart that investors might be keeping an eye on. We'll also highlight significant support levels that are worth keeping an eye on in case of future declines. Around 130 is the first region to keep an eye on. This area, which is slightly above Tuesday's closing price, can offer overhead resistance close to a horizontal line that connects a string of highs and lows on the chart that dates back to late August. If the bulls can recover this level, the shares may rise to the critical $150 region. A number of peaks developed on the chart, just below the stock's record high, which was achieved in early January. Investors who have averaged into the stock may choose to lock in profits in this zone. When the stock declines, it's worthwhile to keep an eye on the crucial $150 level. Near the first breakout point from the falling wedge pattern, the 50-day MA, and a trend line connecting a range of trading activity on the chart going back to last September, the shares find a confluence of support in this area. Lastly, a more severe decline might cause Nvidia's stock to retest lower support below $96. Near the late April trough, which also roughly corresponds with two notable peaks that emerged on the chart in March of last year, investors would probably view this as a high-probability place to accumulate shares. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Big tech stocks leading market gains today, with the Nasdaq 100 officially wiping out year-to-date losses. The Magnificent Seven adding more than $800 billion in market value following the deal between the U.S. and China to temporarily reduce tariffs. Joining us now with more, Dan Ives, Wedbush Securities Global Head of Technology Research. Dan, great to have you as always. I know you say this truce is the best case scenario. Which tech stock is the biggest winner within that scenario?
I think it's Apple and Nvidia. I mean, if you look at this, that was the black cloud, right? I mean, the supply chain hearts and lungs are in China. And as much as you could talk about moving to India and others, this is a huge sigh of relief. And I think it changes our view that, new highs for tech, new highs for the market, now on the table after what we just view as a dream scenario happened this weekend.
As the U.S. announced an initial import tariff agreement with China on Monday, the three major benchmarks surged. This was a significant event for investors who had been worried for weeks about President Donald Trump's tariff plan and were especially concerned about a worsening trade war with China that could have a devastating effect on the economy, but that worst-case scenario appears to be fading. This week, the U.S. agreed to levy tariffs at 30% on China, a number light years away from the 145% proposed last month. Since many tech stocks depend on China for production and parts for their goods, all of this was especially positive news for growth stocks and tech stocks in general. Electronics products were exempt from tariffs in the United States, although this exemption was only temporary. Strong economic conditions are necessary for growth enterprises to advance. Therefore, it should come as no surprise that the tech-heavy and growth-oriented Nasdaq Composite surged, rising 4.4% in a single trading session on this US-China news. Without Nvidia, the top AI company in the world, this list wouldn't be complete. Since Nvidia manufactures a large number of its goods outside of the United States, news of tariffs had a significant impact on the company's stock price. Any reprieve from possible short-term tariff pressure is welcome, even as this AI behemoth declared a significant step to invest in domestic production. Why purchase Nvidia right now? Even though the top AI chip designer in the world has already shown astounding revenue increase every quarter, this growth story might only be getting started. Customers of Nvidia have committed to continuing their significant investments in AI, and the AI infrastructure build-out is still proceeding. Furthermore, Nvidia is ideally positioned to gain from the development of AI in the future. This will happen as businesses deploy AI agents to tackle practical issues at work, and as automakers use Nvidia technology to power autonomous vehicles. The company's earnings report on May 28th and Chief Executive Officer Jensen Huang's keynote address at Computex at the beginning of next week are two further catalysts for Nvidia. The shares are still in bargain zone today at 27x forward earnings forecasts, so any good news might drive them higher. Invest in this well-known AI player today and wait for the long-term growth narrative to continue. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Dan, one quick follow-up. Earlier in the show, I said the Mag 7 was a boy band like NSYNC that's breaking up. Who would be
and
your...
I love NSYNC.
Yeah, look, who would be your Justin Timberlake, though, for breakout? You said Apple and Nvidia. If you had to pick one for the best breakout for investors right now, which one are you most optimistic about on the aftermath of these trade truces?
If there was like a Timberlake part of NSYNC breaking out, it would have to be Nvidia. I mean, and look, Jensen, we'll see what happens with the black leather jacket if he had to, make it to be a boy band. But look, I think the reality is that I think it makes all new all-time highs because there's only one ship in the world fueling the AI revolution, and that's led by Godfather of AI, Jensen Nvidia.
How big of a catalyst, Dan, is the fact that the United States is lifting some of these sanctions between the U.S. and Saudi Arabia when it comes to chip purchases? We're seeing the shares of Nvidia up over 5%.
It shows it's not just about China. I mean, think about it. That was not on the table when you look at that whole market. It's not coincidental that they're in Saudi Arabia this week after, obviously, the U.S.-China weekend talks with Besant. Because it shows, when you think about AI revolution, you only have 4% of U.S. enterprises going through AI, 0% in Europe, 0% in Asia outside China, and in Middle East, it's baby steps in terms of where we are today. So this just shows what I believe is going to be happening over the coming years. The trillions being spent on AI, and obviously it starts with chips, but think about on the software side, from Microsoft to Google, to Amazon, to obviously names like Palantir, which I kind of view as front and center the best pure play AI name out there.
Nvidia is a computational infrastructure firm. Its compute and networking segment comprises data center computing platforms and end-to-end networking platforms. In addition to gaming platform solutions, the graphics division provides GPUs, game streaming services, and associated infrastructure. On May 12th, UBS maintained its buy recommendation but reduced its price objective for Nvidia from $180 to $175. Despite the current H20 restriction, the company anticipates FQ1 2026 sales to exceed the $43 billion projection. Nvidia is getting ready to release a degraded version of its H20 chip for China in response to this prohibition, which lifted U.S. export restrictions. In a crucial market, this can help it maintain its competitiveness. Nvidia received $17 billion in revenue from China in FY 2025, or 13% of its overall sales. According to Reuters, Nvidia has received orders for the H20 chip totaling $18 billion since January 2025 due to increased demand from significant Chinese internet companies like Alibaba and ByteDance. Over the following 4 years, the business intends to produce up to $500 billion worth of AI supercomputers in the U.S. With the possibility of resuming data center GPU shipments to China, UBS anticipates growth to pick up speed in H2. With an impressive return of plus 177.7% over the course of the year, Nvidia was the fund's best-performing stock for a second consecutive year. Since the beginning of last year, Nvidia's Hopper GPUs have been at the center of an explosion in demand for chips that are strong and efficient enough to handle the energy-intensive requirements of AI processes in data centers. Initially holding over 95% of the market share in these types of chips, Nvidia has quickly cemented their position as the technological leader in the space, launching the successor to the current Hopper GPU in March, Blackwell, preventing AMD and Intel from making meaningful inroads into the fast-growing market. Nvidia's financial performance has been strong throughout the year, with quarterly revenues hitting $35.1 billion in their most recent quarter, beating consensus expectations by 6% and representing a plus 94% year-over-year increase. Additionally, Nvidia's data center business, spearheaded by the Hopper H100 chip, rose fivefold over the past year, indicating the continuing demand for advanced AI infrastructure. The Blackwell chip is twice as powerful for training AI models and has 5 times the capability when it comes to inference, or the speed at which AI models respond to queries. Nvidia is well positioned to capture a significant share of the estimated $2 trillion market opportunity over the next 5 years. Despite some fears about Blackwell manufacturing delays creating share price volatility, Nvidia has rebounded rapidly, propelled by solid earnings results throughout the year and promises from management about future supply. The H100 chip, which costs about $40,000, continues to see significant adoption because it can increase the efficiency of AI model training while lowering overall costs. Furthermore, the launching of the H200 processor aims to extend Nvidia's technological supremacy, ensuring momentum beyond 2025. Nvidia's valuation is still up for dispute, but considering its dominant market position, inventive capabilities, and exposure to long-term secular growth patterns in AI, cloud computing, and data infrastructure, the stock still seems reasonable and is not at a substantial premium to history. Because of this, Nvidia is still in a strong position to provide consistent long-term outperformance, which makes it a vital component of growth-oriented portfolio. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
We have a lot to cover here. Kevin Green is with me. He's watching all the levels. Good morning to you, Kevin Green. We're starting off with some slight green after yesterday's inflation print and also some Fed speak this morning, too.
Yeah, if you're kind of looking at the economic calendar, not a lot on the agenda here today outside of the Fed speakers. As you kind of talked about, maybe a little bit of weakness when you're looking at market breadth here. We do have a couple of sectors in the green here so far, but they really are on the economic expansion type of sectors that are actually performing. Energy, materials, and industrials really kind of leading the way for now. It seems like there's a lot of rotation that's taking place in the morning. But overall, as you kind of talked about throughout the morning here, it has been very bullish. We've made some really good gains over the last couple of weeks, and the market's really looking for that to really continue here. That 5,900 level is still going to be an area of resistance for us. We talked about this one yesterday. We actually did see a little bit of a break above that 5,900 level, getting to around 5,906, and then we saw a failure going into the close, which is fine. We have another day today to try to break through here and try to make some incremental gains. But if not, and we do see a breakdown in price for whatever reason, we still have this blue line, that upper end of resistance that is now going to turn into support to be able to leverage in order for the market to really kind of bounce off of. And you're looking at around 57.50 there. So even if we saw around a 100-point move to the downside here today, I don't think it would be actually a negative thing for the market. And once again, having some upside potential here when it comes to market breadth, if that's going to continue, that's going to be favorable for the bulls. On an intraday basis, once again, looking at 5,900. To the upside, 5940 could be your area of resistance if we're able to break through this current level here. And any type of breakdown, I'm looking at 5825 here. This is going to have to be really news-driven in order for us to get a significant fade to the downside. But we might be in this type of market as well, Nicole, where we just see kind of compression or maybe more range-bound trading activity like we saw yesterday. Well-defined ranges to the upside, downside, and we kind of trade within that range. And that's okay. A consolidation for a day or two is also pretty favorable. So overall, we're looking pretty good, holding up a key area of resistance here. Some structural positioning at that 5905 level. I'm really keeping my eye out on that as we go into monthly options expiration on Friday to see how this level 5900 actually does resolve itself.
Oh, yeah, and that'll bring some those expiration when you have whatever it is, triple witch or whatever, it's going to bring some heavy volume too when you have options expiration. What's interesting too is you noted the 5,900 level right there again. Yesterday we were bumping up there, sort of knocking on the door, and we got to see whether or not we can get up there and stay above some of those key levels. You're also watching gold right now down $50 today. What is important there in that story?
Well, for the gold trade right now, we are at let's say a make or break moment when it comes to the gold trade. We've seen obviously a really strong run here over the last year or so, and right now we might be in a situation where we have a double topping pattern taking place. You can see that MACD actually cross in a bearish formation, still above the zero line, but a bearish formation with that 12 EMA below that 26 EMA here, and we are approaching that 50-day moving average. That's going to be in that yellow line here, that 3163 level. Looking for some buyers to really step in. Are we going to continue this trend to the upside for gold, which has had a really great run? If so, that 50-day moving average has been a key area of support that we've been able to consolidate and break above, over the last year or so. You can see it within that chart. RSI, once again, we had a bearish divergence that took place, especially when we looked at that April 21st, April 22nd high, and now that bearish divergence is kind of following through. I don't think everything is said and done when it comes to the gold trade. We've seen fake outs before, where we see heavy selling taking place, more of a risk on tone in the market, getting out of risk off type of assets here. But this is actually a very critical area that I'm looking at seeing being resolved here. And if we actually have a breakthrough to the downside of this 50-day moving average, Nicole, and it's on significant volume, you can make the case that maybe that 3,000 or even that 2,900 level on gold could be in the picture over the next couple of weeks, if not months here. So very good trade. Seems like some profit taking is taking place here, but from a technical standpoint, you would say that this could be a bounce zone for gold futures.
Right, understood. And so now, last but not least, I also want to take a yield curve. Some thoughts there as we're seeing the 10-year yield, by the way, at 449 today.
Yeah, so we actually are going to be looking at the 30-year, 10-year Treasury spread. I had somebody reach out yesterday and said, hey, are we concerned about what's happening with the 30-year? Because the 30-year Treasury is almost hitting at around 5%, hitting that 5% mark. Is it a concern right now? And I would say, no, it's not really a concern. It's the rate of change between the spreads that really does matter. Obviously, we've seen a decent re-rating to the upside or a normalization of this curve, but we are not seeing a complete disjointed move when it comes to the 10-year and 30-year. Is the 30-year hitting that 5% or going to exceed 5%? That might be the case, Nicole, but you'd like to see actually a normalization in the yield curve in general if you are looking at an early cycle type of market, getting back to the basics when it comes to the economic growth within the United States. And I think as long as the spreads themselves are kind of moving in unison across the curve from the 2-year to the 5 to 10 to 30s, I think you're okay. I don't think there's a warning sign here. The warning sign would be a move to the upside for the 10-year, equities moving lower and dollar moving lower. That's sell everything or sell America trade that people were talking about 2 weeks ago, 3 weeks ago, a month ago. That's not in the cards right now. I think this is a healthy normalization when you're looking at the back end of the curve here. I would not put this on the radar as a potential risk. It's going to be a problem when it comes to government funding because it seems like Scott Bessent really wants to target the 10-year, 30-year portion of the curve here. It'll cost us more money, but when you're looking at it from a trading perspective, normalization is actually good and healthy for this market.